Hello and welcome to today's Fat Tail Daily video. I'm joined today by our crypto and tech expert, Ryan Dinse. Ryan, welcome, mate.
Hey, Woody, how are you?
I'm good, thank you. Now, in today's piece, it's a really interesting piece, actually. Not that the others aren't interesting. It's continuation of interestingness. But you draw parallels between, well, you tell the story of the origins of YouTube. And you draw parallels between YouTube's success and the potential of AI companies today. Now, I was going to ask, maybe to kick the conversation off, what specific characteristics should investors look for in AI startups that might indicate similar disruptive potential of the tech stocks of the early 2000s or the
Yeah,
mid
so that's a
2000s?
pretty big question to start off with, Woody.
Yeah, well, I like just as I like compound lifts, I like compound questions too.
Straight to the point. Look, I think the point of today's piece was when big disruptive paradigm shifting technologies come, they throw up opportunities. Now, that's not a controversial statement, but what the traditional investing world is really bad at is realizing the speed and the magnitude by which these opportunities come. So, there are waves of hype and there's other things you have to sort of be wary of, but at the same time, there is real tangible differences happening as well. And that's sort of like the part that I try and straddle as an investor and as an advisor on tech stocks is what is hype and what is real. And you can't find that from looking at the financial statements. It's just not, you have other metrics you can look at. And for example, with something like YouTube, which had phenomenal growth, the key metric to look at there was daily average users or daily average viewing. You could look at that one metric or look at the number of hits on the website, and that would tell you something big was happening. And you didn't need to understand the technology. You didn't even understand what was possible. Was it possible to share video files on the internet? For that, you wouldn't need to know about bandwidth. You wouldn't need to know any of that as an investor. You would just need to know, hang on, a lot of people are using this site. Something big is happening.
Yeah.
And that obviously happened around 2004, right? Which is another interesting point, which I probably didn't make in today's piece, was 2004 was a full 10 years after like Amazon was founded. So it was like 10 years into the internet revolution. So sometimes, although these things happen fast, there's an inflection point where something just hits the zeitgeist and then takes off. The trend in itself can take longer to warm up and go through various cycles. So something like Amazon, founded in 1994, nothing much happens for a few years. And then 1997, the tech stocks start, the original .com stocks start roaring. And then you get that 99, 2000 blow off top where things go crazy. Untold riches could have been made if you were in there at the time. And then a huge collapse. And then 4 years of probably tech stocks doing nothing. And then you had ideas like YouTube coming in. Apple found its wave again. Then you had the smartphone come in. You had the smartphone, the iPhone, the original iPhone in 2007 when Steve Jobs invented that. Again, a paradigm shifting moment. And if you look at a lot of growth in tech, in the app economy, and all that stuff, that all came from the smartphone hitting the internet revolution. The technology, the bandwidth was all there at that point. The broadband, the speeds all enabled that. So as a sort of like tech investor, it's like, what do you look at? Well, you look at people using stuff, but you have to understand the stories happening behind it all as well, which is interesting, which is good. It's not just dry, return on equity or, what's the balance sheet looking like? It's like, hang on, is this, what does this tech actually do? Why are people using it? What will supercharge that? How can it grow fast? And I think that's the interesting thing about investing in tech. There are these stories. And if you read today's piece, that YouTube founder story is super interesting. From 3 average employees on average wages, 2 years later, the company's getting bought over for, over $1.5 billion. Like that's the kind of thing dreams are made of. And tech is the one place that can happen. You know what I mean? Maybe you got mining here in Australia where that's, similar, life-changing gains are possible. But tech, it happens regularly in the sense of, the last 2 decades. So,
you mentioned timing, and that was actually my next question, like the importance of timing in tech investments. I was going to ask, how can an investor gauge whether we're at the right inflection point for AI technology, similar to where, you talked about YouTube, similar to where YouTube was in, say, 2004, 2006?
yeah, I'd say,
Is it possible? Is it still too early? That's what I'm getting at.
Look, the framework we sort of use, and this is what we talked about last year when we launched our tech investor service, was a sort of methodology called lock, build, explode, and it's these things are always just approximations. You're not going to have an exact metric you can use.
Of
But
course.
the early stage of any new tech is the tech is real and something's happening, and that's sort of like the bit when people try to buy the original assets. When in AI's case, it was Nvidia. Suddenly, everyone realized, hey, this thing is real. It can do amazing stuff with OpenAI. With you being able to talk to a computer like a real person and it be able to understand or look like it understood what you meant and talk back. And that was a game changer. And if you look at OpenAI, that's a good example actually of what I was talking about before. That went from 0 to 100 million users faster than any other product before it.
Yeah.
So that was your point, that was an inflection point of sorts that said this trend is real. And then Nvidia went on this massive run. So the next step of understanding this was real. It wasn't just hype. It wasn't just the metaverse or something that's just people talk about. It was something real. It was getting users. The next step there was trying to lock in the tech that's going to make it happen, and that happened to be GPUs and stuff like that. The next stage of that is the build stage, and I would say that's where we're at right now. There's trillions of dollars being invested in data centers around the world by the likes of Google, Amazon, Apple, Facebook, Intel, a whole bunch of others. They're all trying to own the infrastructure or the rails of what AI will be built on. And look, a similar thing happened with the .com. Everyone thought Cisco and all these networking technologies would be the big deal, the big money spinners. Didn't actually end up like that necessarily. It ended up being the people that built on top of the infrastructure. And to your point, I don't think we're necessarily there yet, but you're never going to know when you're there unless you're in watching it every day and into it. You're not going to know that YouTube is a big deal unless you're already watching it. By the time you know about it, if you're not watching the space, it's too late. You've missed it. So, sorry, just
That's all right. Goes to show the authenticity, the nature of these chats.
had a 2-year-old trying to break in. Luckily, I locked the door. But yeah, you're not going to know. No one's going to ring the starting gun and say, "Hey, now we're at the inflection point." But there will be a moment if you're looking close enough. If you were watching the .com or the internet stuff in the early 2000s, and you saw YouTube just go viral, that would have told you something had changed on the internet front, and that would have pointed you to the fact that it was video sharing being possible. And what did that mean? Now that's had lots of implications beyond just YouTube being a video sharing platform. It's changed the way we consume entertainment, information. Even this video today, it's on, it's on YouTube.
It's grown to be one of the key fundamental channels by which most people grow their businesses too.
Exactly, and look at the disruptive media around the world. Look at things like Tucker Carlson or anyone who's getting more viewers on off the main media than what the traditional news media is. So the fundamental shifts are interesting as well. And as an investor, you're never going to be able to guess them, but by understanding they happen, I think that's where you can be one step ahead of the mainstream, because the mainstream usually starts off very skeptical about these changes. It doesn't look real. The investment metrics don't make sense. I remember when YouTube, for example, got bought by Google, and I actually vividly remember this in 2004 for 1.65 billion. Everyone said that is a ridiculous amount to spend on a video sharing site. 3 blocks, they've just bought out for 1.65 billion. It doesn't make hardly any revenue. Why don't they just recreate the technology themselves? The same answers you always hear these days when the new tech comes in. And yet today, I think Google, 10% of its entire revenue comes from YouTube.
Yeah.
They make, almost, I think it's 20 times what they paid for every year in revenue from YouTube. So it's been a phenomenal investment. And to Google's credit, I suppose they were a disruptor of their day. They were a small player. They had that vision to see what was possible, not just what was. And I think with AI, it will be the same thing. There might be a point where if you are in this space and you're experimenting with stuff, which me and Charlie, Alpha Tech Trader, Charlie especially, he tests things out all the time. There might be an aha moment where you go, hang on, this actually is changing stuff. And even with other colleagues, I know a lot of them use perplexity.ai as a search engine these days over Google. And they do that because as people that have to write, factually based content, we need to be able to source the material. And Perplexity does that in a really efficient way, and it just makes more sense for us. So I think there's always clues, and the key is to find a clue that makes you sit up and take notice, and then follow where that leads. That's where you'll find the investing opportunities, I think.
You mentioned that big companies are pretty bad at innovating as well. Do you think that will hold true in the AI space, or are there any incumbent tech giants that you believe are well positioned to compete with the AI startups that will come through?
I think it's a hard one to say because, like I said, a lot of the current .com era tech giants, which we now live with, the big seven tech firms, they grew up being the disruptor and being that tech challenger. So it's not like they don't know tech. So I would say they will try to find ways to suck in some of that value to themselves, and they'll use to their advantage are their balance sheets, the huge amounts of capital they have available, and a lot of them have walled gardens. I would say, they've got a network effect. YouTube itself has 2.6 billion users, active users. Facebook probably has half the world still on its platform. You've got new platforms as well, like TikTok with a lot of users in certain demographics. But what I would say, and the point I would make is generally those companies will be stuck in a profit model that makes them money, and they will be resistant to changing to a new profit model because just the history of any industry, that's what happens. A bank doesn't move away from charging fees on a product just because there's fintech companies. Kodak and Blockbuster didn't move away from their models, even though Kodak invented the digital camera. It still didn't move to it because it didn't want to kill its film processing business. So what I would say is, with AI, this is actually pretty interesting, is not only does AI create the tools to disrupt tech itself, and it also creates the tools to spread it, and it also could create a better user experience. So with AI, you could find these companies that just go, that just start from nothing and within 6 to 12 months have disrupted a major player, because a major player will never be able to react because they've got shareholders, they've got profit models. So even a Google or a Facebook, they're not going to be able to change from what they do now very fast. It will take them years to do so. And I think that's where the opportunity is. With AI right now, though, I think as stock market investors, that innovation, we're not at that point of innovation yet. It's the companies I'm looking at are startups, like not that we can invest in them, but just to see what's happening. And you are seeing the companies like Nvidia just investing into a whole bunch of startups as well. So they're trying to spread their risk that way. They're saying, hey, if we put money into 100 startups and 2 of them go on to be the next big thing, at least we've got a stake in them as well. So it's hard to say. I think for stock market investors, the opportunity right now is in that sort of build stage stuff, trying to find what are the essential assets that will be used and where is their value in them that's not been recognized by the market, because the market is still skeptical on the AI opportunity, or has turned skeptical. It probably was a bit over exuberant at the start of the year, and now you see a lot more stories saying, oh, looks like that AI thing was a big nothing burger because it didn't happen straight away. That's just the way the mainstream works. So yeah, I think that's how I would characterize it right now.
Yeah, interesting. You suggest that successful tech companies often solve simple but common problems. It's kind of what you just alluded to there. Like, what are some everyday problems that you think AI is uniquely positioned to solve in the near future? So forget long way off.
Oh, look, it already does some stuff. I'll give you a trivial example, but it's one I used over the weekend. My 2-year-old who was trying to break in a minute ago, he broke the flat screen TV on our wall a few weeks back. He threw a ball at it, I think. And these flat screen TVs, just a big line went over it. They're gone. You can't fix them. They cost more to fix than to buy a new one. And so we've got this tiny TV to replace it for now. We'll maybe save up and buy a new one soon. But I was trying to think what TV to get. And so I used my camera phone and I used the AI option on it. And I took a photo of my room and I asked it just with plain text. I said, look, give me a few options of what kind of TV I could get and how it would look on the wall. And AI within, 30 seconds came up with all these options of what TV I could get and actually placed it in my room so I could look and see how it looked. Well, that might seem trivial, right? But think about the home renovating business and the people doing up the house. Think how many billions of dollars that is. Within 30 seconds, I got to look at a bunch of options on what I could get and what I might get. And then the app itself pointed me to deals I could get to buy the TV. So it gave me what the solution looked like. It gave me the option to buy straight away. Now, to me, that's a paradigm shift in how you buy. It's not me searching and trawling through websites like I would with Google and trying to imagine what it would look like on the wall. I got to see what it would look like on the wall. So that's available today. That you can do that today, and that's an interesting, just everyday use case I think is available now. businesses, you're starting to see headlines where businesses are using AI just to do productivity. So every repetitive task that humans do. So it's like the old screwdriver jobs got replaced by machines in the industrial, not the industrial revolution, but say in the 20th century. You'll find that the screwdriver jobs of the sort of administrative economy are getting replaced already. I saw a report saying Klarna, which is a big fintech company, just got rid of about a third of its workforce and replaced it with AI, just to do simple administrative tasks, just to do things like, oh, this form's been filled in, let's move that data to here. And stuff that someone would have got paid, not hugely, but would have got paid to do is now being replaced by AI. In graphic design, my wife's in graphic design, and my dad's actually an engineer. They're finding tools are being used. They're not replacing jobs yet, but they're being used to make things more efficient and faster and more accurate. You're seeing some companies using AI to outsource work overseas as well, because they can get a cheaper labor source, and also use AI to quality check it, as it were. So you're seeing lots of different little things happening right now, I think. And I think this is what will surprise people. It's like a lot of experimentations are going on, and then there'll be this gradually, then suddenly moment where it just happens. You know what I mean? It's like when you might start
and
using
then it's
Google.
integrated in all walks of life.
That's integrated. Imagine life before Google. Do you remember that? Remember a phone book? Remember using the yellow pages? I had a job once delivering the yellow pages when I was a backpacker. And within a few years, no one, I don't know if they even deliver it anymore. Like you used to, you wanted a plumber, you'd grab a physical thing. That disappeared overnight. And I think you might find things like that happen. It will just happen. So I think that is what's happening now already. I can see that. I can see the efficiencies. I can see the use cases. But because I'm into it, I'm experimenting with things that everyday people probably don't have time to do. They've got jobs and other things they have to worry about, but it will seep into their life somehow. It will either be through social connections, or it'll be through employment, or somewhere else, or through their own investigations. But it will seep into their life, and then when it does happen, it'll just explode. And I think that's where we're getting to. And that's what that build stage is so important now. All these trillions of dollars going into data centers, upgrading microchips to the latest NVIDIA and Blackwell and AMD chips is to enable that future. Now that rollout might take a year, a couple of years. And that rollout will never really change, to be honest. These companies will always be upgrading to the next best thing. But say it happens on a 4 or 5 year cycle, that first big cycle of AI being possible everywhere, thanks to the cloud and the data centers being all capable, is happening in the next year or two. So the early startups are already building on that technology to try and get the products ready for that era as well.
I think it'll be like an evolution that you don't really quite notice until you're on the other side of it. I had this same sort of realization when I first moved out to Australia. I was just chatting away to my grandma, my 87-year-old grandma, on Skype. And I remember thinking, wow, like 10 years ago, there's no chance yet. And she's just evolved to use it. So
that's right. Yeah, it's crazy, isn't it? They just become everyday use. And look, the older generation like that, they have younger kids and grandkids that show them how to do it. And once you've showed them once or twice, they get it like anyone else. So it does seep its way in. And you've got the old model of the Gartner hype cycle and the stages of adoption as well. And that'll follow. You have your early adopters, your super early pioneers, then you have your early adopters, then you have your early majority, and then you have your late majority. And that's how these products come into society. As an investor, though, for me, the sweet spot is trying to get there when it's sort of like somewhere between the pioneers and the early adopters. You know what I mean? There is when the value is still not priced in, because the risks are high and the skepticism is generally high. But if you get in around that period of the cycle, that can be when you can see something that says, this is real, even if the market's missing it. And you can then try and build a model, or look at a model where you can try and put some value into, or see if there's value that's not being priced in by the market.
Yeah. Cool. Well, we'll leave it there today, Ryan. So we've got timing. We've discussed innovation. There is a third thing, but I'll leave people discover that for themselves by reading the article, which you can access beneath in the description. There's a link direct to it. And as always, there's a link to our sign-up page if you'd like to receive our daily insights too. Thank you, Ryan. I'll speak to you again next week.
Cheers.